For years, the crypto world has felt a lot like the Wild West, right? Super exciting, a bit chaotic, and with almost no rules. Well, it looks like the sheriff is finally in town. Today, we're going to dive into the great cleanup of crypto regulation that's happening all across the globe.
So I think the question on everyone's mind is pretty simple. Is that Wild West era of crypto really, truly over? All the signs are pointing to yes. We are seeing a massive shift from a total free-for-all to something way more structured.
You know, after years of just explosive growth, and let's be honest, some pretty spectacular collapses that really shook the industry, the pressure for clear rules is at an absolute all-time high. So to really get a handle on what's happening, we're going to use the 2025 Global Crypto Regulation Report from PwC as our guide. It basically maps out this entire new landscape, and we're going to break down the most important takeaways. All right, let's get into it.
Okay, first up, the main theme of this entire transformation is simple. The rules are officially coming. That whole gray area where everyone's been operating, yeah, those days are numbered.
And listen, this isn't just some slow, gradual change. The report itself calls this moment a turning point. And that's a really powerful phrase. It's signaling that the change we're seeing isn't just big, it's decisive. This is the moment the industry really starts to, grow up.
So let's look at how this is actually playing out in the real world. Because this isn't just about adding a few rules here and there. It's more like a global race among the world's biggest economies to see who can create clear, comprehensive frameworks first.
And what's really fascinating here is the contrast between the two biggest players. So on one hand, you've got the European Union. They've created something called MiCAR. That's the Markets in Crypto Assets Regulation. Just think of it as one gigantic, consistent rule book for all 27 countries. But then, on the other hand, you have the US, which is making this huge pivot away from just strict enforcement towards building a clearer, more innovation-friendly environment. Two totally different strategies, but they're in the exact same race.
But get this, even the EU's single rulebook isn't quite that simple in practice. This table just shows you how complex it is. Even though MiCAR is the law, different countries have different deadlines for getting their own national rules off the books. So imagine you're a crypto firm. You're looking at this messy patchwork. In Lithuania, you have exactly 0 transition time. But in France or Belgium, you get a year and a half or even more. It's a huge operational headache for sure.
And don't think for a second that this race for clarity is just a Western thing. Over in Asia, major financial hubs are making their own aggressive moves. Places like Hong Kong are rolling out these really sophisticated licensing systems to pull in institutional money. Meanwhile, cities like Taipei are trying to become the go-to hubs for Web3 innovation. They aren't just playing the game, they're trying to lead the pack.
So, you might be wondering, if every country is making its own rules, how do we get any consistency at all? Well, that's where a few lesser-known but incredibly influential global bodies come into play. They're the ones creating the blueprint.
I'm talking about organizations like the Financial Action Task Force, or FATF, and the Financial Stability Board, FSB. Now, they don't write laws that are legally binding. Instead, they create these powerful recommendations. Think of it like a roadmap that national regulators they're very strongly encouraged to follow.
A perfect example of this is the FATF's travel rule. It sounds kind of complicated, but the idea is actually super simple. It just means that crypto exchanges have to collect and share information about who's sending and who's receiving funds, exactly like banks have been doing for decades. It's all about bringing some basic transparency to the blockchain.
But here's the reality check. Even with these global standards out there, a pretty staggering 75% of jurisdictions around the world are still not fully compliant with what the FATF requires. 75%. That number just shows you the massive scale of the cleanup that still needs to happen, and it explains why regulators are moving with such a sense of urgency right now.
And these rules are hitting traditional finance too. Thanks to the Basel Committee, which sets the rules for banks all over the world, the days of crypto being this separate, untouchable thing are just over. Now banks have to follow a really clear process. First, they classify their crypto assets. Then, they sort them into risk groups. And finally, they have to hold more of their own money, more capital, against the riskier stuff. It's a simple but really powerful way to drag crypto risk out into the open.
So we've got these big global blueprints taking shape. But what does all of this regulation actually mean for the average person or the average investor? Well, it means crypto is finally being prepped for Main Street.
The whole philosophy guiding this shift really boils down to one simple principle. Same risk, same rule.
Regulators are basically saying, look, if a crypto product or service acts like a traditional financial one, like, say, crypto lending that looks a whole lot like a bank loan, then it should be regulated in the exact same way. It's all about leveling the playing field.
And this principle is what's paving the way for all these new, regulated products. A perfect example is the rise of staked ETFs. In simple terms, these let mainstream investors easily buy into crypto networks and earn rewards from a process called staking, all without needing to be a tech genius. This brings way more money into the system, which makes it healthier for everybody, and it opens up this whole new way for big investment funds to earn returns. It is a total game changer for making crypto more accessible.
All right, so after all these changes, the race for clear rules, the global blueprints, and this big integration with Main Street, what does the new world of crypto regulation actually look like? What's the final picture?
So, here it is, the key takeaway from all of this. We haven't ended up with one single global law for crypto. What we have is a patchwork. It's not a uniform blanket that covers the whole world. It's much more like a quilt, with all these different national and regional rules stitched together, and each one has its own unique pattern and its own set of priorities.
And that leaves us with one final, and I think really crucial question for the future. As all these countries start competing with their brand new rulebooks, is this competition going to drive standards up and spark a race to the top for innovation? Or could it create a risky race to the bottom where some places offer super light touch regulation just to attract business, maybe creating new risks for the entire system? The great crypto cleanup is definitely here, but what it's ultimately going to build? Well, that's still being decided.